All right, so I wanted to give an update on what I did with AliBaba covered call. So if you remember from last video on AliBaba, I sold a covered call on AliBaba at a 131 strike for January 7th expiry. So I was doing out of the money weekly covered calls, even if the strike is below my cost basis. My cost basis being about 163, I sold a 131 strike. So there's a risk that I lose my shares at 131. So that was the plan. I was selling an out of the money weekly covered call on AliBaba, even if it's below my strike, but I was trying to sell on green days to give myself a good chance that the stock doesn't get breached. Now let's look at what happened to AliBaba on Friday. This is hilarious. So before Friday, I had a chance to remember I had sold it for about 50 cents. If I go back to account orders, let's go to executions. So you could see the one here that I sold was over here, this one here. So let's filter on Baba. So it was this one here for 50 cents. January 7th expiry, 131 call. I had sold it for 50 cents with a 131 strike. Now, if we look at the stock, I had a chance during the week to close it for about 10 cents or even less, because AliBaba at some point was trading at around 115 over here. So January 4th, which was, I believe, a Wednesday or a Tuesday. January 4th was this Tuesday. On Tuesday, it was trading at around 117, even 115 actually, even January 4th right there, yeah, 115. And the option, if we look up the option, but I think it's no longer available, I can't look it up anymore, but it was trading for 10 cents. So I had the chance to close it, but I didn't close it because of commissions, of course. I wanted it to expire worthless. It looked like it was going to expire worthless. My strike was 131, and the stock was trading at 115. So and I only had 3 days to go. So good chance that it expires worthless, and then I would sell another call option weekly on a green day. Now look at this beauty. On Friday, so on expiry date, AliBaba jumps to 133. It had a high of almost 134. So it was trading at 133.6 during the day, and my short strike is 131. So now my call option that was worth 10 cents that I could have closed for 10 cents ended up trading at around almost a little bit over $2 that I had sold for 50 cents. So a complete turnaround, and I was regretting not closing the call option earlier. So now I have to buy back the call option for $2, and rolling to next week will be harder. I won't be able to roll as far as I want to, because the stock's already trading at 133 and my short strike is 131. But I decided to wait and hold on till the end of the day, knowing that this market is ridiculous. And as you can see, AliBaba dropped intraday. It dropped below 131, came back up again, 132. But then at 2 o'clock, it was trading below 131 by a lot. So I decided not to take my chances. I decided, okay, this time I'm going to roll it right away. So what I did is, as you can see in the first two lines, I bought it back for 12 cents. So the 131 call, I bought it back for 12 cents. And then I sold the 141 call for January 14th. So now I'm out of the money by a decent amount. I went from 131 to 141 for next Friday's expiry. And I still did it for a net credit of 55 cents. So the order, I did it in one trade. So I didn't pay commissions twice. So the diagonal call, it's called, because I bought one strike and sold another strike. So net credit fill price of 55 cents, so $55. And now I've got a new strike of 141 for next week. So now I'm in a better position. And that's the plan with AliBaba, is that I'm just going to keep collecting credits weekly until the stock recovers, and hopefully it doesn't fly above my short strike. So if I'm collecting 55 cents and my cost basis right now is about 163. No, this is not correct. So I'm collecting, 55 cents divided by 163, and that's per week, so times 52 weeks. So annualized, that's about 17% per year if I can do that every week. So it's not bad, right? To make 17% per year on a stock that you're down almost, how much am I down? Stock's at 129 and my cost basis is 163. So I'm down 21% on the stock. So now I need to update this, my trade log. So I collected an extra 55 cents, right? So plus 0.55 brings my cost basis down to 162.66. The strike that I have is not 131, I have 141 now, and the expiry is not January 7th, but January 14th. So that's my update with AliBaba. covered call. So what's the lesson here? I think the lesson is either trust in the probabilities, because eventually it ended up expiring worthless, or take profits when you can. So when it was worth 10 cents during the week, I should have closed it for 10 cents. But because of the commissions, it discouraged me. So the other lesson here is to deal with a broker that gives you a good commission, so you're comfortable making the right decisions in terms of selling and buying back to close, instead of hesitating to close because of commissions and then you end up in trouble. Alright, so this was a quick video. If you have any questions, leave in the comments section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.